ExamPrep.School. Massachusetts Producers Exam for Personal Lines Insurance. Exam code SERIES 16-61. There are 4 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Auto insurance, dwelling policy, general insurance, homeowner's policy, insurance regulation, other coverages and options, property and casualty insurance basics. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. Which of the following is a requirement for obtaining a Massachusetts producer license? A. Possession of a bachelor's degree in business administration. B. Completion of 1 year of prior insurance agency employment. C. Being at least 18 years of age. D. Maintaining Massachusetts residency for at least 3 years. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is C. The correct answer is that an applicant must be at least 18 years old to qualify for a producer license in Massachusetts. No degree, prior employment term, or minimum residency duration beyond general residence requirements applies. Reason A is not correct. A degree is not required by state law and is not an eligibility criterion. Reason B is not correct. There is no mandatory prior agency employment period required to apply. Reason D is not correct. There is no multi-year residency requirement beyond normal applicant residency. Question 2. On a Massachusetts producer license application, applicants must disclose which of the following criminal history items, regardless of when it occurred? A. Felony conviction for insurance fraud from 15 years ago. B. Misdemeanor conviction for shoplifting from 3 years ago. C. Speeding violation conviction from 1 year ago. D. Consumer bankruptcy filing from 8 years ago. The correct answer is A. The correct answer is that all felony convictions must be disclosed on the application, no matter how long ago they occurred. Other items like misdemeanors, traffic violations, or bankruptcies do not require indefinite disclosure. Reason B is not correct. Misdemeanors in Massachusetts generally require disclosure only within a limited time frame, not indefinitely. Reason C is not correct. Minor traffic violations do not need to be disclosed as criminal history on the license application. Reason D is not correct. Bankruptcy filings are financial matters, not criminal history, and are not required on the criminal disclosure section. Question 3. Under Massachusetts regulations, if a producer submits a license renewal application 45 days after expiration, the producer must A. Retake and pass the Massachusetts producer licensing examination. B. Complete additional, continuing education hours equal to the number of days late. C. Pay the standard renewal fee plus the statutory late renewal penalty. D. Undergo a new background check and fingerprinting process. The correct answer is C. The correct answer is that renewal within the 60-day grace period requires payment of the normal renewal fee plus the mandated late penalty. Neither re-examination, extra CE, nor repeat fingerprinting is required. Reason A is not correct. Re-examination is only required if the license has been expired beyond the allowable grace period. Reason B is not correct. Additional continuing education is not tied to the number of days a renewal is late. Reason D is not correct. A new background check and fingerprinting are not mandated for renewal within the 60-day period. Question 4. In Massachusetts, during each 2-year continuing education cycle, producers are required to complete how many hours of ethics instruction? A. 2. B. 4. C. 3. D. 6. The correct answer is C. The correct answer is that Massachusetts producers must complete 3 hours of ethics instruction as part of the total continuing education requirement every 2 years. Reason A is not correct. 2 ethics hours is below the state requirement and thus incorrect. Reason B is not correct. 4 hours exceeds the mandated ethics portion for the cycle. Reason D is not correct. 6 hours is well above the ethics requirement in Massachusetts regulations. Question 5. Which action must Taylor take to remain in compliance with Massachusetts non-resident producer licensing requirements? A. Continue operating under the existing Massachusetts resident license until its next scheduled renewal. B. Submit new fingerprints to Massachusetts and retake the state licensing examination before writing further business. C. Notify the Massachusetts Commissioner of the change of residency within 30 days and apply for a Massachusetts non-resident producer license. D. Rely on reciprocity between Vermont and Massachusetts without any additional filings or fees. The correct answer is C. The correct answer is that Taylor must notify the Massachusetts Commissioner within 30 days of relocating and apply for a non-resident producer license, leveraging reciprocal licensing without retesting. This ensures she remains legally authorized to transact insurance on Massachusetts risks after becoming a resident of another state. Reason A is not correct. Maintaining the resident license until renewal is not permissible once the producer establishes residency elsewhere. A non-resident license must be obtained. Reason B is not correct. Retaking the exam and submitting fingerprints is not required because reciprocal agreements waive testing for non-resident applicants with a valid home state license. Reason D is not correct. Although reciprocity exists, it does not eliminate the need to formally notify the commissioner and apply for the non-resident license along with required fees. Question 6. Under Massachusetts insurance regulation, unfair discrimination occurs when an insurer treats applicants unequally based on characteristics that are A. Length of driving record. B. Loss experience. C. Race or religion. D. Credit history. The correct answer is C. The correct answer is based on Massachusetts law, which prohibits treating insureds differently on the basis of immutable personal characteristics, such as race or religion. Reason A is not correct. Length of driving record is a valid rating factor tied to risk, not prohibited. Reason B is not correct. Loss experience is a legitimate underwriting factor, not an unfair basis for discrimination. Reason D is not correct. Credit history is a permissible underwriting consideration under state rules. Question 7. Which of the following actions by an agent constitutes misrepresentation under Massachusetts insurance law? A. Suggesting a client accept a lower coverage limit to reduce premium without explaining risk. B. Claiming in advertising that a policy covers flood damage when it specifically excludes that peril. C. Quoting a premium that differs by less than $1 from the insurer's rate sheet. D. Providing a rate comparison chart without listing every endorsement available. The correct answer is B. Misrepresentation is any false or misleading statement regarding policy terms. Stating that flood is covered when it is excluded is a clear example. Reason A is not correct. Recommending a coverage change without fully explaining risk is a sales practice issue, not a misrepresentation of policy terms. Reason C is not correct. A minor premium variance from the rate sheet is an administrative discrepancy, not a false statement about coverage. Reason D is not correct. Omitting endorsement details in a chart is incomplete disclosure, but not a direct misstatement of policy provisions. Question 8. Under Massachusetts insurance regulations, which practice constitutes filing a false financial statement by an insurer? A. Submitting audited financial statements 1 day after the statutory deadline. B. Knowingly understating reserve liabilities to inflate reported surplus. C. Excluding reinsurance recoverables from the annual statement due to clerical oversight. D. Rounding premium income totals to the nearest $1,000. The correct answer is B. Intentionally understating reserves misleads regulators and stakeholders regarding the insurer's financial condition, which is prohibited. Reason A is not correct. A late filing is an administrative violation but not a false statement. Reason C is not correct. An unintentional clerical omission, while problematic, is not a deliberate false statement. Reason D is not correct. Rounding figures is a minor formatting issue, not a misrepresentation of financial position. Question 9. Which example best illustrates defamation of a competitor in Massachusetts insurance marketing? A. Distributing a survey showing a competitor's verified customer satisfaction ratings. B. Publishing an unfounded statement that a rival insurer is insolvent. C. Asserting in ads that a competitor's coverage options are less comprehensive without clarifying context. D. Describing factual exclusions in a competitor's policy based on publicly available forms. The correct answer is B. Defamation involves making false statements that harm a competitor's reputation. Claiming insolvency without evidence is a classic example. Reason A is not correct. Reporting verified survey results is factual and not defamation. Reason C is not correct. Expressing a critical opinion without false facts does not constitute defamation. Reason D is not correct. Describing actual policy exclusions from public forms is a lawful, factual statement. Question 10. Under the Fair Credit Reporting Act, which of the following actions is not a statutorily permissible purpose for obtaining a consumer report? A. Underwrite an applicant for an auto insurance policy. B. Evaluate an applicant's residential rental application. C. Assess a consumer's eligibility for homeowners insurance. D. Determine eligibility for government benefit programs. The correct answer is D. The correct answer is that determining eligibility for government benefit programs is not among the Act's enumerated permissible purposes, which include credit, insurance, employment, and tenant screening. Reason A is not correct. Underwriting auto insurance is expressly permitted under the Act's list of permissible purposes. Reason B is not correct. Evaluating a tenant's rental application is a covered purpose under the Act. Reason C is not correct. Assessing eligibility for homeowners insurance is permitted as an insurance underwriting purpose. Question 11. Under the Fair Credit Reporting Act, which of the following insurer actions in underwriting does not constitute an adverse action requiring notice to the consumer? A. Declining to issue a policy because of negative credit data. B. Canceling an existing policy due to a low credit score. C. Surcharging a policy by raising the premium based on a credit score. D. Requesting additional documentation to verify report information. The correct answer is D. The correct answer is that requesting additional documentation to verify report information does not constitute an adverse action. Adverse actions are denials, cancellations, or surcharge adjustments based on the report. Reason A is not correct. A denial of coverage based on credit data is a classic example of an adverse action. Reason B is not correct. Policy cancellation due to credit score is an adverse action requiring notice. Reason C is not correct. A surcharge or premium increase triggered by the report is an adverse action. Question 12. Under the Fair Credit Reporting Act, which of the following is not a required element of consumer authorization for obtaining a credit report for insurance purposes? A. A clear and conspicuous disclosure in writing. B. Consumer's written signature on a standalone document. C. Explicit identification of the permissible purpose for the report. D. Verbal consent confirmed by telephone recording him. The correct answer is D. The correct answer is that verbal consent, even if recorded, does not meet the Act's requirement that authorization be a clear written disclosure signed by the consumer. Reason A is not correct. A clear written disclosure is explicitly required for authorization. Reason B is not correct. A consumer's handwritten or electronic signature on a standalone form is mandatory. Reason C is not correct. Specifying the permissible purpose is a required element of valid authorization. Question 13. After discovering and disputing an incorrect late payment entry on her credit report, Maria receives confirmation that the credit reporting agency has corrected the error. Under the FCRA accuracy dispute process, within how many business days must the agency notify Maria of the results and provide her with a free copy of the revised report? A. Within 5 business days of completing the reinvestigation. B. Within 10 business days of completing the reinvestigation. C. Within 30 calendar days of completing the reinvestigation. D. Within 45 business days of completing the reinvestigation. The correct answer is A. The FCRA requires a credit reporting agency that corrects or deletes information as a result of a reinvestigation to notify the consumer of the results and provide a free copy of the revised report within 5 business days. Reason B is not correct. 10 business days exceeds the FCRA's specified 5 business day notification and report delivery requirement. Reason C is not correct. 30 calendar days refers to the reinvestigation period, not the post-investigation notification timeline. Reason D is not correct. 45 business days is beyond the FCRA's mandated timeframe for notifying the consumer and providing the revised report. Question 14. Which characteristic best distinguishes pure risk from speculative risk? A. Possibility of only loss or no loss in pure risk. B. Availability of insurance coverage for speculative risk. C. Inclusion of potential financial gain in pure risk. D. Requirement to hedge speculative risk exposures. The correct answer is A. The correct answer is that pure risk involves only the chance of loss or no loss, whereas speculative risk includes the possibility of gain. Reason B is not correct. Insurance availability does not define the risk type. It is a transfer mechanism applicable to pure risks, but does not distinguish pure from speculative. Reason C is not correct. Pure risk does not include potential for financial gain, which is a hallmark of speculative risk. Reason D is not correct. Hedging is a risk management technique, not a defining characteristic of speculative risk. Question 15. Which action is an example of risk retention rather than risk transfer? A. Accepting potential losses by setting a high deductible. B. Shifting risk through a surety bond. C. Purchasing a commercial liability insurance policy. D. Transferring exposure via an insurance captive. The correct answer is A. The correct answer is accepting potential losses through a high deductible, which means the insured retains risk up to that amount rather than transferring it to an insurer. Reason B is not correct. Using a surety bond shifts the financial obligation to a third party, constituting risk transfer. Reason C is not correct. Purchasing insurance transfers risk to an insurer rather than retaining it. Reason D is not correct. A captive insurer is a form of risk transfer to a related insurance entity. Question 16. According to the law of large numbers, what happens as the number of exposure units increases? A. Actual loss experience converges toward expected loss values. B. Variance of results increases significantly. C. Individual risk outcomes become more certain. D. Premium rates must decrease proportionally. The correct answer is A. The correct answer is that as exposure units increase, the ratio of actual losses to expected losses stabilizes. aligning observed results with expected outcomes. Reason B is not correct. Variance typically decreases with larger samples under the law of large numbers. Reason C is not correct. The law applies to aggregate outcomes, not certainty of single events. Reason D is not correct. Premium rate changes are influenced by many factors, not directly by this law. Question 17. A specialty insurer is asked to cover a retailer's projected profit from launching a new product line. The profit estimates fluctuate widely and lack standardized historical data. Which element of an insurable risk is most directly violated by this proposal? A. Definite and measurable loss. B. Large number of homogeneous exposure units. C. Calculable chance of loss. D. Economically feasible premium. The correct answer is A. Insurable risk require losses to be definite and measurable so that the insurer can quantify and verify the loss amount. Projected profit lacks precise, standardized data and cannot be measured accurately. Reason B is not correct. A large number of homogeneous exposures pertains to risk pooling, but the scenario fails due to measurement issues, not insufficient exposures. Reason C is not correct. Calculable chance of loss involves estimating frequency, but the primary issue is inability to quantify the loss severity. Reason D is not correct. Economically feasible premium refers to affordability. The scenario's core problem is measurement, not premium cost. Question 18. Which characteristic differentiates a mutual insurer from a stock insurer? A. It is owned by policyholders yet issues only non-participating policies. B. It is owned by shareholders and issues participating policies. C. It operates as a reciprocal insurer managed under attorney-in-fact agreements. D. Deny coverage because a loss occurred off-premises. The correct answer is D. The correct answer is that mutual insurers are owned by policyholders and often issue participating policies returning dividends, unlike stock insurers that are owned by shareholders and issue non-participating policies. Reason A is not correct. Mutual insurers issue participating, not non-participating policies. Reason B is not correct. This describes a stock insurer rather than a mutual insurer because of shareholder ownership. Reason C is not correct. This describes a reciprocal insurer, not a mutual insurer. Question 19. Which statement best describes an alien insurer? A. An insurer incorporated in its domestic state of domicile. B. An insurer incorporated in another U.S. state and licensed to operate in the jurisdiction. C. An insurer incorporated outside the United States that is licensed to write business in the jurisdiction. D. An insurer incorporated in the jurisdiction but licensed to underwrite risks outside its borders. The correct answer is C. The correct answer is that an alien insurer is incorporated outside the United States and must be licensed to operate in a state. Reason A is not correct. This defines a domestic insurer headquartered within its state of incorporation. Reason B is not correct. This describes a foreign insurer incorporated in another U.S. state. Reason D is not correct. This scenario does not define an alien insurer, but one domiciled locally with broader licensing. Question 20. Which statement regarding non-admitted insurers is correct? A. They are licensed by the state and subject to its guarantee fund provisions. B. They are not licensed in the state but can provide surplus lines coverage for hard-to-place risks. C. They must file their policy rates and forms with the state insurance department. D. They occasionally cede all risk to admitted carriers before binding coverage. The correct answer is B. The correct answer is that non-admitted insurers are not licensed but can provide surplus lines coverage for risks uninsurable in the admitted market and are not subject to rate filings or guarantee funds. Reason A is not correct. Licensed insurers are admitted, making this incorrect for non-admitted insurers. Reason C is not correct. Rate and form filing is a requirement for admitted, not non-admitted insurers. Reason D is not correct. Non-admitted insurers provide risk directly as surplus lines rather than ceding entire risk to admitted carriers. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below, we read them all. Find full practice exam books in the description or at ExamPrep.School.